Hello, Money Monday audience, and thank you for joining us today. Question of the day: what is life insurance and why do we need it? Today on our segment, we have two financial professionals, Venise Ewing and Armand McCarroll, combined, who have more than 23 years of experience in the life insurance industry. Life insurance is one of those things we often don't think about until it's too late. How many of us really know all the right things to do when it comes to choosing the best policy that meets our needs? According to a nationwide study conducted by LearnVest and Guardian, over a third of respondents who had life insurance didn't know what type of policy they had. Even when 70% felt confident that their insurance companies would pay out if the need arose, only 34% felt sure that they would know how to collect a payout. So, Money Monday's audience, do you have questions about your current policy? Do you know the type of policy you have? Do you know the terms of your policy? Or perhaps you may not have a policy at all. Well, we're going to shed light on those benefits of having life insurance today, and we'll dispel any worries or anxieties you may be experiencing. Let's start with a couple of stories I've read. Please note that the names and ages of the real individuals have been changed to protect their privacy. I thought each of these stories were very relevant to today's show and provide a real-life perspective about the importance of life insurance. Without further ado, welcome to the segment.
Thank you, Jill.
Thank you, Jill.
Welcome to the show.
Yes.
So what I wanted to do was do something a bit different. I wanted to start with a couple of stories that I've read that could perhaps provide a bit of clarity and some understanding as to why life insurance is important for many of our viewers. So story number one. Hi, I'm Susan. I'm having my first child and getting life insurance became a top priority for both me and my husband. We researched policies, got quotes for an affordable term life insurance policy, and had our medical exams. Imagine my surprise when a few weeks later, the agent called me back and told me my new adjusted rate. The cost of the policy had gone from a reasonably monthly fee they had originally quoted to nearly 4 times the amount. The agent said that the reason was that my cholesterol levels due to the pregnancy were high. I called my doctor in a panic. Cholesterol levels always spike during pregnancy, she reassured me, and they possibly won't go back to normal until a few months after you give birth. After doing some research, I found that it's nearly always better to get a life insurance policy before you get pregnant to avoid potential price strikes and hikes brought on by temporary conditions during pregnancy. While some companies will account for the fact that you've gained weight due to pregnancy, factors like higher blood pressure or postpartum depression can also affect your ability to get the best rates. Now my daughter is 3 months old and I'm still waiting for my numbers to go back down to normal. I really wish I'd known this at the beginning of the process before I had conceived. So Armand and Venise, let's start by first telling our Money Monday audience, why did you get involved in the insurance industry before we address the questions related to this particular story?
Well, I'm going to let Venise go first since I'm a gentleman.
Okay, thank you, Armand. So, Jill, I would say it was life-changing, and I want to say it was just the perfect opportunity for me at the perfect time. I was transitioning with employment. I always wanted to work in the financial services field or industry. That is my background. When the opportunity came, it was just God-given. And then I started learning some things. And I started educating my family. And from that, it went from my head to my heart. As I say, I got passionate about it. And so now I've learned, and I'm very confident in saying that most of America don't understand the benefits of having your family protected through life insurance.
That's good.
Yeah, that's awesome.
Mr. McCarroll?
Yeah, so I came by way of financial services via real estate. I never will forget, I own a real estate company, and I was sitting out in front of one of my clients' buildings on his final walkthrough. And at that time, he had a mother that was a paraplegic.
Okay.
And so we're talking about his mom and what was his plans for his mom. And he didn't have any. He didn't think about long-term care. He hadn't thought about where his mom was going to move. And I just realized at that point that people need education about those types of things. And at that point, I sought out the financial services industry, and that was 19 years ago.
Wow.
So it went, as Venise said, it went from my head to my heart really quickly. And since that time, I've probably delivered 4 to 5 death benefit checks. And it's nothing like, in that moment of grief, seeing the somewhat satisfaction that taking those financial burdens off of someone has.
Good to know. So let's go back to this story that we've just read about Susan. And so Susan primarily, she wanted to get, I'm assuming, life insurance because she wanted to protect the newborn that she knew she was having. But what most people may not know, and what she did not know, is that some temporary conditions can affect life insurance rates. Are there any
Absolutely.
additional temporary conditions that could affect insurance aside from pregnancy?
Go ahead.
Totally. So I want to say with Susan's story, you're not always prepared for something that is just a blessing. Stating that she should have gotten life insurance before she got pregnant, some things just happen. Life is unexpected. There are many conditions that can arise, and some things are just temporary. Sometimes it's things that are unforeseen. So I'll just explain an example. I had a client who had picked up some weight due to actually getting a better position at work. And so, Jill, when you become from a laborer to a supervisor, you're sitting at the desk a lot.
Yeah.
And you're snacking. You're not eating on a regular schedule. You're eating whenever lunch comes around because you are the boss. And he picked up about 30 pounds in a year. Well, that was devastating. But when he understood the benefits on what we call elevated or rating, it's just something that he had to take control of. He understood the benefits of, 1, getting healthier, and 2, saving himself some money for being healthier for his monthly premiums. So when things like that arouse, there are times where we can explain and get to a sound, balanced solution very quickly. And most of the time it's through education. The client makes that choice.
That's good to know. So can you explain for our viewer, there may be someone who does not know what life insurance is. Can you
Totally.
explain what life insurance is?
So there's a couple of ways I want to explain that. 1, life insurance is a transfer of risk. We pay a small portion, which we consider a premium. There's options to paying your premium. Monthly, semi-annually, quarterly is even an option. Most people look at life insurance as a liability, and it's not. Life insurance, Jill, is an asset.
It's an investment.
It's an investment. I love to call it the proper protection.
Okay.
It's for the lives that will be here behind you. It's for those who need your help now, for those that you are taking care of, that lean on you to support them. And for parents with children, that's 100%. If something happens to mom or dad tomorrow, the support for that child is everlasting. And life insurance is one of those benefits in life that if people understood the benefits of life insurance and why it's an asset for protection for your family, then more families will probably have more of it.
Good point.
Absolutely. Absolutely.
So would you say that if a person became sick, that typically life insurance always costs more?
Absolutely. The older you are and the more health challenges you have, typically the higher the rate is going to be. And that's why we always recommend that people get insurance as they're younger or as they're healthier, because if they wait, it definitely would be more expensive.
So the earlier you start, the better.
Absolutely.
Totally.
Can we talk about what are the different types of life insurance?
Okay, so basically there are only 2 types of life insurance. You have term and you have permanent.
Can you explain the two?
Right, so absolutely. So term, I always liken it to explaining it like real estate. Term is like renting an apartment, and permanent is like ownership.
Okay.
So term, you can have 10-year, 15-year, 20-year, and let me just say this, every company varies, but what that typically means is that your rate will stay the same for that 10-year, 15-year, 30-year period.
For whatever term it
For
is.
whatever term it is.
Okay.
Now, at the end of that term, it doesn't necessarily mean that the policy is going to end, but that rate will end.
Okay.
And it typically goes sky high, and then that's when people either drop it. One of the things that we really educate people on is this idea of converting. And that is converting from a term policy to a permanent. Now, what you have to make sure is that your insurance company has something to convert to.
Yes.
Now, on the flip side of that, you got permanent. Now, there's 4 types of permanent insurance. You have whole life, universal life, my favorite, index universal life, and variable universal life. And each one of those offers different benefits, but they also offer a higher rate of return on the money that you invested. And I can go deeper into that, but we'll just stop at that point.
So I've heard a lot of people say that term typically is much cheaper than whole life. Is that a true statement?
I will say, I never use the word cheap, because for a mother with several children and just getting into the workforce, maybe young, maybe a single mother, it's affordable for her.
Okay.
Not to say that it's cheap, but it's what she can afford to protect her family. So I never use that term, but Gio, term insurance, I like to use it as temporary insurance, which means you're only actually paying for a death benefit. There aren't any living benefits or contingent benefits while you're alive when you have term insurance. And so I tell people when I educate, when I'm speaking at companies and other programs, I always explain to them that term insurance is just like death insurance. It's only going to pay out at the point of death for the family, and there's nothing else to it.
Okay.
When you speak of permanent, it's more expensive, but I tell people that's only due to your lifestyle and your wishes and how you will love for your family to proceed after you.
When should a person start investing in life insurance?
As soon as possible. I have policies on infants, young adults. Again, going back to what we talked about before, the younger you are, the cheaper, the more inexpensive it is, and obviously you don't have any health concerns, and so you can build from there.
Okay.
I do want to say one thing. With some companies, there are term policies that do have living benefits. You know, like if you become chronic, terminal, or anything like that, that it'll allow you to get half of the death benefit before you pass away. But that really just depends on what company you're dealing with. So what's really important is that you sit down with a professional and figure out what's the right amount, what's the right type of insurance that's good for you.
Okay. And so when you talk about that a person can take advantage of some of the death benefit while they're alive, if there is a chronic condition that arises, are you referencing something like a viatical settlement?
No, a viatical settlement is a little bit different. No, I'm actually talking about, so we had a situation, I had a situation recently where my client had a term policy.
Okay.
Probably 2 years in, she got pancreatic cancer, and it was terminal. And so what she wanted to do was utilize part of her death benefit to prolong her life, and she wanted to buy some real estate for her kids. And so after going through back and forth with the insurance company, we were able to get 50% of her death benefit released to her so that she can do those things, and then when she passed away, the rest went to her beneficiaries.
That's good
so
to
that's
know.
what I'm talking about.
So there are some living benefits to
Yes.
having life insurance.
Absolutely.
Yes.
And that's what we really kind of tell people to focus on. Life insurance is not the same insurance that your grandparents and your great-grandparents had. It's way more advanced. I mean, we even talk about using life insurance as a way to supplement retirement.
Okay.
So because of the tax implications, but we can get into that later. So
Are physicals always required when purchasing life insurance?
No.
Are there some type of policies that maybe you guys can talk about, maybe at a minimum, or something maybe in your company that a person can qualify for without actually having to take a physical?
So there are limits, first of all, depending on the company, because we're a brokerage, so we don't deal with just one firm. We deal with several hundreds of companies. So we feel that we can do the legwork and the shopping for our clients. There are some companies that offer just minimums where there is no medicals that's necessary. There are some issues or situations at times where someone is just perfectly healthy. They are vegetarian, they've been on a healthy diet all of their life, they work out, they have a stressful job. And for someone that beneficial, they probably will be approved with no medical needed as well. So it's all dependent on the company, but there are several companies, Jill, that depends on the client and the amounts, then that can be a waiver upfront.
Can either of you explain, I know you brought up a term that a viewer may be interested in knowing a bit more about. You stated that you're a brokerage. What's the difference between a brokerage and a traditional life insurance company?
So, I mean, certainly I don't want to mention any names, but a brokerage allows us to shop for our clients. In other words, we represent many different companies, not just one.
Okay.
And so you were talking about different types of insurance. So, and that's why it's very important that we know our clients so that we know what company to take them through. If they don't want to do a medical, then we have companies that maybe you can do up to maybe $249,000 without a medical. Or if they got some sort of pre-existing condition, then we know that we got companies that maybe we can take them through. We recently did a seminar for AIDS HIV clinic.
Yes.
Now, I had no idea that there were insurance companies out there that would insure a person with AIDS and HIV. Come to find out, we had two companies that, depending upon their blood levels and numbers, we could get them insured.
Wow.
So those are the types of things. So that's why it's important that don't automatically eliminate yourself from thinking that you cannot get insurance. Talk to a professional that's a brokerage and let them shop for you just like we do.
That's good.
Totally. I was going to add just something to that. There are some situations, there have been situations where clients have been denied for years, and they assume that that's just everywhere. I won't speak of anything in specifics, but I want to say that we've gotten people approved that thought that it was just no end to ever getting life insurance. And for some, it was more coverage than they ever needed.
Wow.
So it was wealth building at that point, generational legacy building, because I only need this amount. If you can give me that amount, that's going to help me build something for my children and grandchildren that I haven't even met.
That's good to know.
Yes.
Alrighty, so let's go ahead and start with our second story.
Okay.
Sure.
Darius Harris was tragically killed at the age of 17 by simply knocking on the wrong door, trying to visit his girlfriend. By mistake, Darius went to the wrong apartment in the complex where his girlfriend had recently moved. He knocked on a door that he believed to be his girlfriend's apartment. Shortly after, Darius was gunned down and pronounced dead at a local hospital. Later on, it was reported that a GoFundMe page was created to pay for funeral expenses for Darius. The family was asking for a $10,000 donation, but only reached 60% of their goal of $6,000. This year alone in Chicago, there have been 217 people who have been killed out of 1,043 shootings. Some families have set up GoFundMe pages to take care of funeral expenses. Armand and Venise, Darius' story, like so many others in Chicago, are very tragic. Should parents be concerned about insuring their children?
Absolutely, Jewel, totally. My first death claim in this business was a 23-year-old that I encouraged the mother to put on as a rider on her policy when she was 16.
Wow.
Who would have known that the rider would have been cashed in when the daughter got killed? And so with all of the killings, the shootings, and everything that's going on in the city, as Venise indicated, I have children as well. We don't want to think about that. We don't want to talk about that. But we need to have that dialogue, and kids need to be insured.
What's the
Yes.
earliest age that a child should be insured?
The moment you get a social security number, Jill. For most parents, 15 days is the minimum that I've saw a child get insured. For me, being a single mother of three, I have three girls, Jill, 18, 12, and 4. It's a necessity in my house. My oldest would travel to school by CTA. We live in the heart of the city. We're in Bronzeville. We are no boundaries free of crime. It happens all around us. So I think about it all the time. But it's life. You're at work. You have those children that are transitioning into adults. You have to teach them some things in life, and that's being responsible. So my daughter will travel on the bus some days. With all the crime, I think about her all the time and her safety. So life insurance in my house is like food on the table. It is a must. It's something that I don't think about. And I'm passionate when I speak to families. Like Armand, we talk and we educate. We recommend things as the professionals. Some parents don't understand the benefits of insuring your kids, though we never think to ever want to bury our children first. But it's a day of times now. It has to be a conversation, and it's for us to bring that out.
Armand, I want
Yes.
to bring back something that you brought up in your response to the question. You stated that a parent can get a rider. So are you stating, in addition to, or aside from thinking about, oh, I'll just get a policy for my child, I can have my child as a rider on my own policy? Is that what you were stating?
Yes, good question. So with a lot of insurance companies, if you are 17 years or younger, you can be a rider on your parent's policy. And all that rider means is an additional insured.
Okay.
So the parent is covered on one policy as well as the children. And what's crazy is it's so inexpensive to get a child covered. I'm talking about pennies on a dollar to get a child covered.
Can you give an example?
I
So
was
if
just
I'm a
gonna
parent
say.
with $100,000,
So the example that I gave earlier, the premium at that time for that client was, I think, something like $72.
Okay.
To add her child increased her premiums $2.08
wow,
for $50,000. I'm sorry, for $100,000
in coverage.
in coverage.
For the child.
For the child.
That's good to know.
And so when that child passed away, I gave the mother a check for $100,000.
Wow.
Wow. I mean, it's tragic, but
Yeah.
at least there was some coverage there that was
Totally.
made available.
Absolutely.
Can the two of you talk about, currently in 2019, what is a typical cost for funeral expenses?
You want to take that?
Sure. Well, I'm going to add something to what Armand just explained, because I
Go
also
ahead.
need parents to know that most companies allow your child to only have half of the coverage that you yourself have in full.
Okay.
What we consider in force. It means that the policy is active and current. And so if a parent has 500,000, Jill, that means the child can have up to 250. Anything over that is questionable, and that's typically with most companies. I had a scenario, a 25-year-old student, and she was a full-time employee. She had a 4-year-old and a 5-year-old child. For less than $27 a month, that mother has $150,000 coverage on herself, and each one of those children are covered at $25,000.
Wow.
Speaking of today's times, the question you just asked, that would definitely bury a child at $25,000 each, and she'll have some monies left over so that if she doesn't want to return to work next week, she has a choice. Sometimes you may need to take the other kids on a trip. For children, it's a burden when they lose a sibling. And sometimes life cannot just kick back in like it's something normal. You have to allow those children to grieve. And I tell people that's one of the benefits of having protection. You can take that time off and not have to worry about next month's bills. And you can cater to maybe the mother or the child that's left behind and just give them that grieving time at an inexpensive cost. Kind of like a bonus.
See, most people, when a loved one dies, most people don't have time to grieve because they're thinking about the financial burden
Yes.
that they have. And so when they don't, it's just amazing when they don't have that financial burden, how much stress comes off of a person's life.
Yeah.
When they know that, like Venise said, when they know that they can stay home for 3 months or 4 months and not worry about the finances.
Yeah.
And so when I say that we actually save people's lives, stress is the #1 killer of heart attacks and killers in our world, and that stress is about money. And when you don't have that, you can live a lot longer and have a great life.
What I like that the two of you have dispelled is the fact that children can be covered for pennies on the dollar
Yes.
in comparison to an actual adult's policy.
Absolutely.
I mean, I find that to be absolutely amazing because sometimes people don't think about the fact just to add a couple more dollars, I can make sure that my entire house is secured.
Listen to this. Listen to this. Just recent, I did a term policy on a 26-year-old with a child. $500,000, $500,000 under $40 a month.
Wow.
So now we hope that nothing happens to that mother,
Yes.
but how can that change that family's life if something happens to that mother?
That's good to know.
$500,000.
Yeah.
And so one of the biggest things that we got to stop looking at is looking at insurance as a bill. It's an investment, it's not a bill.
Totally.
That's good. And it's an investment in the future.
Yes.
Absolutely.
Yeah, because you're
Absolutely.
thinking beyond yourself, but you're thinking
Totally.
about future
Multi-generation.
generations.
There you go.
That's right. And so is there a maximum amount of coverage typically that a person can have on themselves? Is there a cap that most insurance companies will say? Meaning, if I make only $30,000 a year, can I have a $1 million policy?
They usually use 10 times your annual income as a
Okay.
barometer, but if we can justify it, then they'll do it. So in other words, let's say you make $30,000 a year and you want a $500,000 policy. Well, we can talk about the kid's college. We can talk about income replacement, who's gonna, the mother or the grandmother's gonna take care of that child, and we can create a case for that higher amount.
Okay, that
So
makes
that-
sense.
yeah.
Yes.
So, go ahead.
I'll add to that, Jill. For some people, they've been left inheritance, and that's one of my passions with this industry now. Creating something that's unforeseen, because I can make $50,000, but that doesn't explain that grandma left me $1 million. And so that's called a blessing. Inheritance is something that you may not know a person's worth unless
Yeah.
you ask.
Yeah,
And so some people can make a dollar amount and be worth totally more.
that's good. And I like the key word that you use, inheritance.
Yes.
Because I think sometimes we often think about that there may be struggles with trying to pay bills on a
No.
day-to-day basis. But at least with this gives you the opportunity to make sure that something is left on the table.
Totally.
Absolutely.
Totally.
Yes.
That's
Yes.
good to know.
Doesn't it make sense if you can pay a few pennies on a dollar for months to come and to know that 4 or 5 generations behind you can be
Living off of it.
Oh my God.
And that's why most of us, we have such a scarcity mentality when it comes to insurance and just coming to finance in general. And so one of the ways of increasing inheritance, increasing multi-generational wealth is through what is pennies on a dollar, and that's life insurance.
That's good to know.
Yes.
That's good. All righty. So what we're going to do is continue on into story number 3. When I married Robert in 1978, I was 21 years old. I never could have imagined that I'd be a widow by 26, or that I'd have a 9-month-old baby to take care of on my own. As soon as we became pregnant, Robert started talking about buying life insurance, but I was hesitant. I was 24, but Robert was already thinking like an adult. It's not that I was an adult. The topic of life insurance was just scary. I was pregnant with our yet-to-be-born child, and the last thing I wanted to think about was one of us dying. Robert passed in March. One morning, Robert left for work, and I didn't know then he would never return home. I had a hair appointment with a woman across the street. I was sitting in a chair in her basement when I heard footsteps coming down the stairs. I turned to see my brother Jim, who was a construction worker just like my husband Robert. Jim looked at me and said, "Kim, we have to go." I remember him pulling me out of the chair and driving to the hospital. My first words were, "How bad?" He just squeezed my hand. When we arrived at the ER, the other construction workers were there. It was hard for them to look at me, and that's when I knew. My story is a reminder that once you have a family, no matter your age, life insurance is absolutely essential. I didn't want to think about that at that time, but luckily for me, my husband had. Wow.
Whew.
What a touching story.
Yes.
And so what I like about this story is that her husband had gone ahead and purchased life insurance without her even knowing. You know, he told her, hey, honey, let's get life insurance. At the time, of course, she was 21. She's like, I'm not thinking about that. It's like we're having a baby, not trying to think about being a widow. But something in him knew that
Yes.
I need to go ahead and take this step. But what's amazing is he took care of everything so that now when this incident happened, she had more than enough for her and her newborn child to live off of.
Yes.
What a powerful story.
I love him.
You love
Totally.
him?
I love him.
He's the
I love
ideal
him.
client, right?
Yeah.
The ideal husband, Jill. You hear me? The ideal man of the house.
Amen. So in today's economy, what should a good insurance policy consist of, and what should the policy coverage look like?
So as I mentioned before, it should cover, and I said this, I'll say it again because this is so important to the audience. It should cover 6 areas of your life. It should cover your funeral and burial expenses. It should cover any bills that's outstanding. It should cover your mortgage. It should cover the kids' college. It should cover income replacement, and it should cover your wishes. So what we do is we sit down with the client and put dollar values on each one of those figures. And here's what we found. Most people, Jill, are underinsured. They don't think about income replacement. They don't think about the kids' college. All they're thinking about is the funeral expenses. And insurance is way more than that. And so we've taken people from having 15 to 25,000 to having millions.
You know, one thing that I'm thinking about with this story in particular is that she didn't know that there was a policy.
Yes. That's
So there may be people who are beneficiaries to policies and don't even know it. What can a person do to check to see if maybe they are an heir to maybe a policy?
I'm going to say this story, it just moves me. We have a business partner, and she's like my ace coon, my ride or die. She's with me 6 days out of 7 a week. And she just went through this. She's a widower, should I say, as of January of last year. She's been with our firm just a year this spring, and her husband was that guy.
Wow.
He left her monies that she did not know existed. And due to that, she didn't have to move out of the house, Jill. She was able to give his kids monies they didn't even know existed, which bonded her and the daughters a little closer.
Wow.
She was able to take some time, take some trips, and when she tells her story, she tells that story, that he loved me more than I knew when he left here, I found out. And so I tell people this is a perfect way when you asked earlier about the 2 types of insurance. Well, Armand just explained to you what we go over and call our financial need analysis. And those are the 6 steps. Well, this is a perfect time to explain to the audience, in those 6 steps is where we place temporary versus permanent insurances. Remember, we explained that temporary insurance is more affordable. You get more for your dollar. That is things like mortgage relief, college expenses, supplement income. Those things are only for a certain period of time. Those things can be covered through the temporary insurance, where you get way more for the money. And then you have permanent things that you need to cover, that it needs to go everlasting until you die. And those are the things that permanent insurance will cover.
Okay.
So do you need a combination of both? Well, that happens when we sit down and talk to that family. Can you afford the $2 million that may be needed? And you think that number sounds extremely out of the door? It's affordable when you can combine the 2. And so you can get everything done under the cost that you can afford and be, it's like music to my ears, Jill. It's like a peace of mind to know that if you leave tomorrow, I know my girls will go to college. I know they won't have to move out of the home. I know they can take some trips and enjoy life and love mom while they're shopping, you know? So it's a relief. And just to say, people need to look at it different. I mean, I can go on and on and on with praise stories. But until you realize what your children and your families mean to you, you wouldn't understand a story like that. He knew what would happen with his household if he didn't come home from that construction site.
Wow.
And Lord be willing that even though she was skeptical, he moved forward. And that's what some of us have to do sometimes. You can't wait on your spouse to understand. You have to take that initiative and just do it. At the end of the day, they would not regret that you took that
sure they
step.
Right.
Listen,
I'm sure they
if
won't.
you got people in your life and you say you love them
Yeah.
Woo.
and you don't have insurance, then I got to question whether you really do love them.
Yeah.
Or how much do you love them? As Grandma say, there's a thin line.
Well, you know what? This is good information. I also want to talk about, because I know you talked about having a combination of the two, both temporary and permanent insurance. And you had gave an example earlier where you talked about that you had a person who had over $500,000 in coverage. I'm assuming that person went through some type of medical examination in order to get an amount of coverage in that amount. So if there is someone that's in our Money Mondays audience now that may be a young person, they maybe are starting in their career, probably 25 or 30 years old in that range. And now they know that they can get some of the best rates because they're younger, they max out. So they maybe
Yes.
get $1 million worth of coverage. And they've already taken their examination because they're in the best of health. Can they convert some of that $1 million policy into more permanent, opposed to getting another policy and having to go over that process again?
So the answer to your question is yes, they can. They just have to make sure they are with the right company.
That will
because-
allow them to
that
convert.
would allow them to convert. Because, you know, think about this for a second. If your company just does term, then what are you going to convert to?
Yeah.
Right. So does that make sense? So you have to have a company that has some products that you can convert to. I'll give you a quick story on that exact same thing. In 2014, I wrote a policy on a young lady while she was still working. A $250,000 policy. Everything was great. It was term. She retired 2 years ago, and probably 90 days after she retired, she was diagnosed with breast cancer and had to have a double mastectomy. We converted that term policy to a permanent policy with no medical in 30 days, and now she has insurance for the rest of her
For the
life.
rest of her life.
And with any other insurance company, if she was starting out now, she would be uninsurable.
Wow. That's
So
good
that's
to
the
know.
power of being able to convert.
That's good to know. And so let's talk about those. I know we've talked about starting earlier, but there may be some of our Money Monday audience who are kind of seasoned, or that they've now they have families, and maybe they just didn't think about it. But after listening to this segment, they see the importance of why they should have insurance and why it's important to protect their family.
Yes.
Can you talk to the other person who may be at the age of, let's say, 50, or even an elderly person who may be thinking, I never thought to get insurance? Are there people that are elderly that can be insured at that age? Let's give a practical example.
Okay.
There's a person who's watching who's 50. Let's talk to that person.
Okay.
You're in a 50 age range.
Okay?
Sure.
I'm with them.
Yeah. So we can. And there are some options where they don't have to take medicals either, depending on
The amount of coverage.
not only the amount of coverage, just some health questions that we will ask. Just because you're of age, you may be a perfect health at 50, 55, 60, 65. There are some 65-year-olds in the world, Jill, and I'll say that to the audience, that are so much healthier than the 32-year-olds that eat McDonald's every day. And so we can insure people over the age of 50. We have quite a few companies. We have some programs where they don't have to do medicals either. And those are things like final expense. We have some guaranteed insured companies that would guarantee, as long as we ask a few minimum questions and everything is okay. We even have companies that are borderline. We have people that say, I'm pre-diabetic. I just found out this. Well, we have companies that say, well, Mrs. Ewing, let's just have them complete a questionnaire. Let's just see, what kind of medicines are they taking? What are their diets? Is it hereditary? So just because there's something new, that's why we love letting people know that we do the shopping.
Right.
If there is there is not a no when it comes to our firm until we've done our homework.
That's good to know. Well, what would you say is one of the major secrets that the two of you being in the industry, the amount of years that you've been in there, that you can tell our Money Monday audience about life insurance?
I would say the biggest secret for me is quit looking at life insurance as death insurance and look at it as an investment. For pennies on a dollar, it's one of the best ways to increase wealth. It's one of the, and I got to be careful when I say this, but it's one of the biggest tax advantages that our current administration has. You can save money inside of a life insurance. Death benefits pass to the beneficiary, all tax-free. There's really not too many other investments like that. So I would say the biggest secret is most people look at it as a bill when they should look at it as an investment.
Okay.
I'm going to say I have two, Jill, that I like to share. One, Armand mentioned the four not types, but the four areas of life insurance. And he said something about index universal life. Index universal life is something that maybe I'll say 7 to 8 out of every 10 people has never heard the term. You don't know what it means. It's kind of like old versus new, how the days of times have changed, how milk doesn't cost the same as it did in the 80s. Well, this is a new type of insurance. Very limited companies can offer those products, but it's kind of like the best kept secret.
Okay.
It is something for someone who's very young, who's very healthy, or maybe for someone who doesn't have a lot of time left near retirement and they're looking for options when you speak about taxes. That is one of the most beneficial markets that I would share when it comes to educating clients about the benefits of life insurance along with the tax bracket benefit break.
Give them that example of the trucker that because he's 26.
Yes, so I have a client who's
That's amazing.
he's he'll be 25. He'll be 25 this year, August. He's putting away about $550 a month. But this young guy has proven to us that he makes about $4,000 to $5,000 a week. And that's typical for most truckers in these days and times. And that's hybrid. For me, Jill, that's a great industry. What are they doing, though, to create their own retirement? Because most of them are what they call self-employed or 1099 employees, which means you may own your truck, but you're just a contractor. So there's no liability to the company for you as an employee.
Okay.
And so you have to create all of your own retirement. Well, he has over $1 million worth of coverage, and with the index market, he's creating now a tax-free retirement for himself through his insurance premiums.
Okay, so let's back up. Because this is good. I want to make sure our Money Mondays audience understands this fully. So for someone who's self-employed or someone who may be 1099 with a company, they can get what's called an indexed universal life policy.
Right.
Insured at whatever value they'd like, let's say 500,000, a million, or even 200,000. And they can also add additional funds into the cash value of this policy, accrue interest, and use it as a tax-free retirement?
Absolutely.
You got it.
Yes.
And they won't lose $1.
As the market goes up, their money goes up. When the market goes down, they don't participate.
You know what, but I'm thinking beyond that. For a younger person who maybe is even looking to start stacking away some money.
Right.
Totally.
Because maybe you're not married right now. You're kind of like in the midst of your career, talking about myself.
Yeah.
And I know that eventually I'll want to purchase my own home.
You got it.
And so maybe I can start putting money into this particular type of policy where I can maybe withdraw funds as a down payment for my first home, or to even purchase furniture, whatever I may need. And it's better than a savings account.
Yeah.
Totally, because it's all about a rate of return. I'm sorry, I had to throw that. Because when you said savings account, it's all about, is your money working for you? And what is your rate of return?
And so typically, what are the rates of return on a type of policy like this?
So in those types of policies with the index, you have something called a floor and you have a cap.
Okay.
And all companies are different. Some companies have a 0 floor.
Okay.
Some companies have a 0.75 floor.
Okay.
So what that means is if the market goes in the tank, every year you'll still make at worst 0.75.
Meaning my money will just be there.
Be there, right.
Okay.
You'll never lose.
You'll never go negative.
Absolutely.
Yes.
Absolutely. And
Yes.
then you got the cap, which with a lot of companies, they're up to 15%.
Oh, that's
so,
good.
So imagine making up to 15% inside of an insurance policy. That's crazy. And it becomes tax-free. So that's why we kind of share with our audience that if you have a 401k plan, I know this is going to be controversial. If you got a 401k plan and it's not matching, you're better off putting your money into something like this, growing it completely tax-free, and then being able to take it out completely tax-free.
Yes.
That's really good to know. You know what? I'm glad that you guys kind of brought this out. But this is what's the most important piece. I know that there are some people who are probably interested in finding out more information about all the different type of policy options that you've offered, as well as even begin to get started in their process or their journey of owning life insurance. Can you tell them how they can contact you?
Sure. So my name is Venise Ewing. My number is 708-957-1800. That's our office. We're located in Homewood, Illinois, 930 West 175th Street. I'm going to also give you my webpage. For those techie millenniums, everything is computer and phone. So I'm going to say my webpage is www.wfgconnects.com/Venise Ewing. My name, V like Victor, E-N-I-S-E. My last name is E-W-I-N-G.
Mr. McCarroll?
Mine is completely the same as Venise. My web page is the same. Just instead of putting Venise Ewing, put Armand McCarroll, ARMAND, MCCARROLL. Feel free to give us a call. We'll answer any questions. It's no pressure. We love to educate people about this, and we'll find what's right for you.
Alrighty. And for those of you that are Money Monday audience that are tuning in, if you happen to reach out to either Venise or Armand, make sure that you use the keyword, you guys said JBS or Money Mondays.
Yes.
Let them know where you
JBS.
came from. We appreciate you tuning in to our segment today where we talked about life insurance. Make sure you tune in to all other Money Mondays segment every first and third Monday of the month at noon, and we look forward to seeing you there. The Bible says in Proverbs 13:22 that a good man leaves an inheritance to his children's children. For those of you that are ready to leave a legacy to your children and grandchildren, life insurance can be your answer. We want to hear from you. Submit your questions in advance to moneymondays@jbs.edu. For those of you who would like more information about the Wealth Creation Center of JBS or Money Mondays, go to our website at www.jbs.edu. Don't forget to join us every first and third Monday of the month at noon for a new topic on money management and wealth creation. Subscribe to the JBS YouTube channel. And as always, I'm your host, Jill Thompson, and I look forward to seeing you prosper.